Good afternoon, traders, and welcome to the Blue Line Metals Edge here for Friday, August 12th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. Watching us on YouTube, be sure to like and subscribe to our videos. And if you need any additional information, please go to our website, www.bluelinefutures.com. We recommend that you take a free 2-week trial of our research here. We'll be adding the tactical insights on this drop-down list here, and you'll be able to select that. That's a new report that we've been writing and producing here with some new content. So market moving headlines today, you had University of Michigan, the consumer sentiment, looking at the data that broke out here. The expectations were for 52.5. We came out at 55.1. Looking at the chart pattern, it is an uptick on that news and that data. This data tends to move around a bit quicker than others. So although it is an inflationary report, it's not as dramatic as like core CPI or PPI data. However, it did impact the markets. We saw immediate reaction really was on the euro currency. And you can see we're pulling back here. That's a 50-day moving average. We've been in this overbought territory for just a little while here. This was really your buy signal or your short covering signal on the euro currency was this August 9th to August 10th data. Now looking at a intraday chart here on the euro currency, you can see this is when the data broke. And you're going to get that dollar index pushing up. This is basically the mirror image of the chart with the euro currency with that selling off. Looking at all the other markets here, you got U.S. equities pushing higher, NASDAQ up over 100 points. S&P has been quite supportive. One thing I've been doing on the S&P, going on the micro S&P out to December, because I'm not a believer that this rally will continue to hold. I think we will start to see some catalyst and a breakdown occur, especially when corporate profits start to shrink and more of those recession fears come around. I think that inflation will heat back up and energy prices will push back up again. As you saw that Goldman Sachs released a price target on Brent crude oil of $130 per barrel. I believe that we might not see that, but by end of the year, we might see higher prices. Now getting into the report here, I flagged this kind of as the chart of the day. This is the gold market. You kind of get this repetitive pattern going on when you get this breakdown goes on. This was this huge breakdown from mid-March all the way down into mid-May, and this was kind of the first normal price bottoming action. We saw bounce back up. We saw it retest again. That's that second sign of support. You get the second bottom. That's where the bears remember that first bounce, and what they'll do is they'll cover. And then this third one, once a triple bottom occurred, that's when the bears capitulate. They'll cover initially, and then they'll slam it down. And once they see it break through, you get this movement. So this old support is now new resistance, and we got to keep an eye on that. If we can't get a close over 1813, 1815, 1820, chances are we're either going to consolidate sideways or start to break down again. So we've got some stochastics correcting from overbought territory. So we're going to have to watch that. Other than that, news-wise, again, Goldman cut that 3-month, 6-month, and 12-month forecast to 1850, 1950, and again, 1950 for a year out. I flagged this on the report. This is the actual Goldman Sachs report here. They said that the direction of gold will be determined by shifts in Fed priority function between inflation and fighting growth. So they just want to see like what the Fed's temperament is and how they do it. If they just come out and they're just slamming, trying to kill growth and momentum, or are they trying to kill just the inflation and the growth part of it survives? So if growth survives, you'll see U.S. equities go up. Gold prices will probably pull back on that. So looking at probable trading range today, 1797.5 to 1818.5. We're right in the middle of that. We got down to about 1799.30 on the December gold. We also have some swing trades. If we did get down near that lows, we'd be looking at going long, targeting back up at 1814. I was thinking about changing this and making it an actual slide with the different markets. Let me know if that's something you'd be interested in here, where it has those probable downside and upside targets. Also has the trend here. Unless we break out to the upside, that trend really is back to neutral. So silver's been bullish. It's one of the better performers here today on the metals. And then the copper, we're neutral. Something to flag on the copper, and then my partner identified, Bill Baruch, is that China new loans for July, they came out 679 billion yuan versus whatever that is, a trillion yuan. And it was down, it was lower. And as a result, we saw that immediate impact on the copper market right here. So you got to watch out for some of this economic data. If you look at the system and the trend following system, if you go down to copper, you're going to see that for copper right here, ran into the 50-day moving average. The upward trend's weakening, ADX coming down. Stochastics are correcting from overbought territory. This is really narrow. So you're probably going to get, more inside trading days over here. So you look, trading system's flat now. Remember I told you it was bearish for a long time. Here's your buy trigger. We get a close over 373 and a quarter. Your sell trigger is 342 and a half. Market's at 371, but we pulled back in the middle of the range here. For swing traders, because there is an upward vibe on the market, you'd be buying 365 with a sell at 371 and a half. You can use some of these lower supports as your stop loss point, or you could use that lower boundary, which that's what we're hugging. So it should be some key support in this area, but we're going to definitely want to check on the crowding analysis, see if this had a big short covering throughout the week, if there's less net negative short positions, or are they covering it back to the upside? Two things we want to keep an eye on. Platinum here, $169 rally from low to high. Of course, it's going to have some pullback. So we're seeing a bit of a pullback here today. We'll go down to the platinum market. We're down $4.70. This is going to be your 5-minute chart. Let me go to the daily so we can show you how it looks. A little bit of correction, not too much right here. We are slightly overbought though, but nothing too crazy. If you caught a nice move up in there, be sure to trail your stop on that market. Palladium is pulling back from its highs, so I'd be a little bit, that's something that I'm a little bit nervous on, the platinum market remaining on the long side. Getting back into it here, looking at other things that we flagged. Oh, here's that dollar index chart. This is today, bouncing back up. We'll see if we can close back over the 50-day. However, when you get into the dollar, that trend has been bearish because it broke down. When we saw this breakdown here and this thrust through, that's when it flipped the system to short and is bearish. On the euro currency, it's the opposite. When it broke through the upside, it's on the long. You can see that all the data here for S&P, NASDAQ, and Russell, they've all been bullish. That's really been that turnaround story here after that dovish commentary out of Jerome Powell. He's what really got the thing going back up, although I don't think that U.S. equities have too much more of legs. If you need anything, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck. Have a great weekend.